we're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Falling below $52,000, rumors were circulating online that the U.S. Treasury Department was planning a crackdown on cryptocurrencies in terms of illicit uses. Joining us now is Kristen Smith, Executive Director of the Blockchain Association. Kristen, you point to a lot of things that have happened in recent months and really years as a broader acceptance, a steady progress in a broader acceptance of Bitcoin. You point to Gary Gensler, who knows a lot about blockchain, taught a course at MIT, confirmed as the SEC chair. So you've got Gensler on one side, but what can you tell us about the innuendo or the what we heard about Treasury? Can you fill in the blanks of what actually whether there's any truth to what was on Twitter?
Yeah, I don't think there's any truth to that rumor on Twitter that happened over the weekend. It's unfortunate that a single tweet can have such a broad impact, especially when it's dealing with unnamed sources. But, the Treasury Department isn't the one that brings charges down on companies. Yellen hasn't been there long enough, even if she did, want to work and do in some coordinated fashion to bring these cases. Cases take years for anti-money laundering cases to be developed. And those cases will come from DOJ, not from Treasury. So there was a lot of misinformation in the rumor that I hopefully has been sort of put to rest at this point. But yeah, I do think it had some impact on the markets and spooked people a little bit.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we had a rumor on the Treasury this weekend, and I advise you that it was not true. Now we have the mainstream media touching bases on it. And guys, why would they touch bases on a random tweet? Because they're the ones who sent it out. That tweet spread it like wildfire. Nobody wanted to verify it. It just spread like wildfire. And it gave an excuse for the Fed to do what? Drop cryptos. Take your money. And when it comes to Dogecoin, guys, they're going to ride this to push adoption. Is it a Ponzi scheme? Yes. But we have all types of Ponzi schemes going on. We have all types of stocks on the stock market who have no product yet, but are worth billions. So what's the difference between Dogecoin? There is no difference. We know they're pushing the fourth industrial revolution. And also we have China's central bank speaking positive towards Bitcoin and cryptocurrencies. But we know Bitcoin mining is controlled by China for a reason. We know there is a bigger agenda, a bigger plan. Because when it comes to the New World Order, everything is planned out. Y'all have a wonderful day.
Are you selling everything you own and putting it into Dogecoin?
I wish we could just not talk about Dogecoin. To me, Dogecoin is everything that's wrong. It epitomizes everything that's wrong with the markets today. Just like GameStop, it's cult behavior. It's liquidity from stimulus checks. It's pure speculation, and it will end badly.
Well, do you think it's like the game we all used to play as kids, right? I mean, the musical chairs. I mean, at some point, the music ends and somebody is standing without the chair. Do you think Dogecoin, it sounds like you do, is simply just, I'm going to sell it to you at a higher price because I can until it stops going up? Let's just keep doing this.
Yeah, look, at least, Brian, with musical chairs, at least there was a chair. There's no chair here. There's nothing here. I said this is pure speculation, and there's a lot of examples of this all across the markets, actually all around the world, where people are literally using the gamification of markets as an excuse to quote unquote invest. It's not investing. It's not even trading. It's just pure Ponzi-nomics. And we've kind of socialized this whole idea that it's okay. I said, I really don't want to talk about it, but you are the host, so I have to go along.
Well, Mark, to be fair, we're not talking about Dogecoin itself, I think. And I agree with you 100%. What we're talking, you and I have been doing this for 20-some, 25, whatever years. We're talking about whatever asset class it is, Dogecoin, whatever it may be, the idea that there are dangerous, frothy markets out there. I don't know if Dogecoin is dangerous, but we do have to say, be careful. Do we, right? So I agree. I don't want to talk about Dogecoin itself in as much as the frenzy. It's gone from a nickel to 40 cents. On no news, makes no sense.
Yeah, look, I mean, that's exactly right, Brian, is just the awareness of these types of movements is really important, right? You were just talking about Roaring Kitty and GameStop and the the Redditors, which does sound like predators, right? And I think this total gamification of investing, right? You and I have been talking about this, coming up on 3 decades, hard to believe. And we've actually talked about this construct of investing and what it means to put capital to work and what it means to buy things that have good management and good ideas and good businesses. This is not that. This is what happened in 2000. When you get to a bubble, when you get excess liquidity and you get people believing that they can buy anything that moves and that's okay, that's just gambling, right? And there's a predilection toward gaming and gambling in the world. There's lots of businesses built around that. And I think this is just a really bad example of an extreme of that behavior.
I'm going to put something up on social today or tomorrow, I think, Mark. Everything you need to know about right now, you can learn from Forbes covers from 1999. I'm not joking. I found covers talking about digital money, about how kids were taking over Wall Street and scaring the quote establishment, about how you're not smart, not you, but we are all not smart enough to understand all the new technology. Man, it rang true. Anywho, let's talk about real news. Some good news out of China. A Chinese official coming out and calling Bitcoin, quote, an investment alternative. Not exactly a ringing endorsement, but not exactly a takedown either. And any even slightly positive commentary from China and other big regulators has got to be perceived as positive, does it not?
Sure, especially when that commenter is related to the central bank of China. Look, I believe that Bitcoin will be a central bank reserve asset at some point, whether it be China, whether it be Europe, whether it be U.S. Don't really know who will go first, but I absolutely believe this is a huge positive sign. Look, Bitcoin is I think everything that's right with markets. This is a long-term monetary system. It is designed as an alternative store of value to fiat currencies, which are being destroyed all around the world. Just think about the dollar, right? We've created 40% of all the dollars that ever existed in the last 12 months. And when you do that, you devalue them. And it's because we have too much debt at government levels all around the world. So when you see central bank governors start to talk about an asset that they think could preserve wealth, we've seen that with corporations, with people like Michael Saylor, and it's why I have my hashtag, hashtag probably a fad with a little wink. This is not a fad. This is not a Ponzi. This is something that's going to be with us for a very long time, and it is a great store of value, basically digital gold.
Well, when we're literally printing, we're throwing around trillions of dollars. Like, money is just a construct at this point, Mark. And by the way, you're going to love our RBI coming up in a few minutes. Very quickly, any other crypto you like besides Bitcoin, Ethereum, Litecoin, anything?
Yep. Do like Ethereum very much, and like everything that's being built on Ethereum around DeFi, Aave, Compound, all of Wall Street will eventually end up in smart contracts, and we'll be able to do a lot of what we do in investing